There's good earnings, there's bad earnings, there's disastrous earnings, and then there's i-80 Gold's Q3 earnings. How bad are they? Well, as of the time of us assembling this video, the equity has recovered to just a 58% loss, after sinking as much as 63% Wednesday following the release of the results. Why the crash? Development delays, walking from a joint venture, and a need for recapitalization, among other issues. So yeah, that bad. Before we dive in though, a quick shout out to YouTube users Zolt Zopko 9817 and Jean Van de Graaf 2000, who both requested some coverage on i-80. Folks, we're talking Q3 earnings, we're talking i-80 Gold, let's dive in. All right, let's get through the basics before we get into the juicy stuff here. i-80 Gold in the third quarter recorded revenue of $11.5 million, a 13% decline on a year-over-year basis from $13.2 million. The decline, despite a dramatically improved average realized gold price of $2,400 per ounce versus $1,900 last year, is due to substantially lower gold sales during the quarter. Gold sales declined 33% year over year, falling from 4,600 ounces to just over 3,000 ounces, leading to revenue of $7.4 million versus $8.7 million in the third quarter of 2023. Mineralized material sales also declined, falling 8% from 16,000 tons to 14,700 tons, resulting in revenue from the segment of $4.1 versus $4.5 million last year. Cost of sales came in at $15.4 million, leading to a mine operating loss of $4.5 million, an 850% decline from the $500,000 mine operating loss recorded last year. I guess at least they're consistent in being terrible operators. Quite frankly, it doesn't get better from there. After exploration, G&A, and share-based payment expenses, i-80 posted a loss of $38 million, or 10 cents a share, versus a loss of $4 million, or 1 cent a share in the comparable period. Okay, so let's talk about the capital shortfall. i-80 closed the quarter out with $21.8 million in cash, a decline of $26 million versus the second quarter, despite raising $13 million via an at-the-market financing during the quarter. The cash decline is a result of operating activities having negative cash flow of $19 million due to lower mine operating income. This cash position is a massive problem for i-80. It boils down to this. They saw cash decline by $26 million and now only have roughly $22 million on the books. In other words, at that rate, they don't have even enough cash to get through the fourth quarter. This, incredulously, is despite raising proceeds of $114 million this year alone. And on top of that, they have a debt problem. They're scheduled to deliver gold and silver in December and January as per the terms of a gold prepay agreement. i-80 says the first step of their recapitalization plan is finding a solution to these short-term commitments, with the company looking to defer the requirements. Under the terms of a 2021 gold prepay agreement, i-80 is required to deliver 2,100 troy ounces of gold per quarter, along with an additional 1,100 troy ounces per quarter under a 2023 gold prepayment agreement, both of which are owed to Orion. A separate 2021 silver prepayment agreement with Orion, meanwhile, requires i-80 to deliver 400,000 ounces of silver in 2024. Both of these agreements now need to be reworked to meet the actual production capabilities of i-80. The second part of their recapitalization plan requires the company to work with their current lenders to restructure existing debt, while seeking new debt providers as well in an effort to right the ship. For reference, between an Orion convertible loan, a Sprott convertible loan, and the gold and silver prepay agreements, the company has $93 million in current debt. And right now, they have no way to pay it off. The recapitalization plan is expected to be completed in the first quarter of 2025. However, i-80 cautions that their ability to continue to operate is entirely dependent on this process being successful, with i-80 stating, "These conditions indicate the existence of material uncertainties which cast significant doubt as to the company's ability to continue as a going concern." Due to the need to restructure, a new development plan has also been undertaken. The new strategy is said to be the most effective strategy to generate free cash flow while progressing earlier stage projects to provide a pipeline of growth in the medium and long term. The short of that word salad is that i-80 somehow wants to permit and develop 5 gold deposits by 2030, despite being unable to manage what they already have in operation. Current plans call for the development of 3 underground mines along with 2 large open pit deposits in an effort to create a mid-tier producer, producing 400 to 500,000 ounces per year. As part of this plan, i-80 is walking away from their Ruby Hill Base Metals joint venture, which was announced in November of 2023. Instead, they're going to focus on more advanced stage gold and silver projects. The Lone Tree open pit project has also been placed on the back burner, with i-80 saying that it will likely remain deferred for another decade. The Lone Tree autoclave, meanwhile, is being pushed forward, with a refurbishment feasibility study due next year. Okay, so all this is to say that investors don't really have faith in the ability of i-80 to execute upon this redevelopment plan. And in fairness to those investors, i-80 has 4 operating mines right now and still sold just 3,000 ounces in Q3. So why would they believe them? The results nonetheless have investors calling for the end of i-80, with Ben Kramer Miller saying it was a mistake to cover a short on i-80 before asking if the equity will even survive the restructuring plan. Master Metals, meanwhile, also suggested it was the end for the equity, while Mark IKN referred to them as a train wreck, and Gold Royalties was clear that this is not a quality company. And CEO Technician labeled the results as the mining sector disaster du jour. On the slightly less critical side, Pangea says that the company was never properly capitalized given the ambition of i-80, while Goldilocks is slightly more optimistic following the earnings call. Okay, so let's wrap it up. Was it a good quarter for i-80? No. But do they have a better path forward? Also, no. At this point, given the company issuing the going concern, it's unclear if any value exists here at all. So if you're willing to take a chance on a dead cat bounce, now might be your time to shine. If you're less risk adverse, well, then maybe it's best to wait until this thing is recapitalized, if you're going to step in at all. Guys, there's plenty of junior miners out there, and there isn't much need to hang around one that continues to struggle despite being handed the best gold environment possible. All right, everybody, we covered i-80 because you let us know in the comment section that you wanted coverage on i-80, and we gave it to you. Let us know what else you want us to cover. Let us know what you think of i-80. We appreciate all the likes, comments, subscribers we've been getting this month. The Q3 earnings season bonanza that we've been doing here seems to be going over pretty well, so we want to keep delivering for you guys. Thanks for watching.